love to do during times like this, well, first of all, I like to get positioned where a QID and some uh, shock absorbers help take some sting off of it. All right. And when we're kind of battling around and doing this, I mean, look, we know we're going to be about 70 something days on average, but I don't want to sit here and try to time the bottom either and say, oh, we can't go much lower than that. That's a fool's errand. We just really need to realize we're in a correction. They last some time. What I want to look around for stocks that have either been just mercilessly routed. One comes to mind, Constellation Brands, who owns the Corona beer brand. They own Corona and Modelo and tons of craft breweries and craft spirits and all that new trend that's happening. They're just all over it. Well, what do you think their stock's doing owning something called coronavirus? I mean, it's just not, I mean, it's getting knocked down probably way more unfairly than it should. That's just an example. So I look for stocks that have been either just trucked, and look at I got to take off look at like Pfizer. This is the Pfizer that's paid an increasing dividend for like 51 years. Okay, probably not going to go much lower. It's lower today, but at some point, like I was saying in the update yesterday, you know, these interest rates have been artificially low for so long. Like the 10-year Treasury note or bill pays like 1.3%, and Pfizer's dividend yield, let's go back, let's see it right here. Pfizer's dividend yield is 4.4%. If you bought the stock today and just collected this dividend, had it reinvested or whatever, you're earning 4.4% yield on what? On some ne'er-do-well brand new real estate investment trust? No, on Pfizer. Pfizer, that's been around forever and has increased their dividend for like 5 decades. So there's points in time along the calendar, serve it up how you will, where this stock is probably not going to trade too much lower because of the quality of that dividend stream. I mentioned 3M too. They were actually, how high they were today. Just today they were 156, so they've dropped down here, but they're right at a 4% dividend yield. 3M, Post-it notes. I think they make masks. They probably can't make them fast enough, and respiratory things and all kinds of things for medical. And they've been around for like 100 years. They paid a dividend for like 54 years straight, increasing. So anyway, there's those, and 3M's, Pfizer and 3M, like stock wise, they're a mess, right? So they're maybe scraping more of the bottom of the barrel, but again, it's their name. It's the name and the dividend history. But I also like to notice stocks like DocuSign, and perhaps, well, they were up in the green yesterday, and perhaps why they're kind of holding steady. Now look at this. Look at this massive uptrend that it's in, and it's pulled back, and it's basically trading above its 50-day moving average. I think yesterday it was in the green, and it's not too far down today, just because they get to conduct business without people traveling, right? They get to have contracts and things signed in the comfort and safety of someone's office. They don't need to travel around or be around people to, perform very important and legitimate like business, like signing deals. So this one's very, very compelling to me. So what I love to do is just go around and take notes during market correction. So rather than just not tuning in and just saying, "Oh, phooey on all that. The market sucks, and there's no reason to even plug in." Yeah, there is. There's reasons to plug in and to notice stocks that are like, wow. I mean, here's a stock holding its 50-day moving average, holding its relative strength. So I'm very interested, in stocks like this.